Well, hello there, traders and investors. LA here. This is your daily NeoTA wrap. We take a look at these markets from a neoclassical perspective, looking at supply and demand on the charts, using it to time our entries and to have the trend on our side. Sometimes it's easier than it is at others. Today's one of those days where you kind of scratch your head and you ask yourself, okay, is that it? Is there more to come? And honestly, it's kind of hard to tell. And so we'll plow into the charts here and take a look at them. There's enough evidence to suggest that there's probably some more downside to come, but at the same time, you have to be cognizant of the fact that after some period of time in terms of consolidation, if it's really a bull market, they're going to come in and buy it again. So you have your targets, you try to get to those targets, you try to add towards the bottoms, and then you just layer in. If you're a little bit early, you layer in a little bit more. Let's look at the numbers here today. You actually flipped it around. Index almost 1% higher. Same with the S&P 500, over 1% on the Russell, and then again on the Dow and the Nasdaq. So almost a 1% gain across the board. Gold ends up falling from about 0.3% up to about 0.3% down. Silver same, about 0.5%. Oil was down today. Bonds sold off a little bit. The one thing that was interesting today is the dollar wouldn't sell off that much, even though there's all this talk to try and weaken it. Overseas markets were mostly closed today. If we look at the charts themselves, it's going to be a pretty simple read tonight, and that is that almost every chart you look at, you're going to have one of two things. Either you're going to have a takeaway bar, and let me get the dark color here so we can see it. You're going to have a takeaway bar. In other words, the bar prior is taken away by this bar. It can be a bullish engulfing. Sometimes they are, sometimes they aren't. Takeaway is just a little bit more lax in terms of the definition. You're either going to have that, or you're going to have something where you're an inside bar. If you look at the indexes, almost every one of the indexes, I think all of them were takeaway bars. This is the S&P 500. Here's the Nasdaq. The NDX, and the Russell. Every one of them. I mean, the Russell might have been an inside. No, the Russell actually got over it too. 1361. Actually, it's pretty funny. The Russell's an inside bar, slightly. And that was going to bring me to the next comment, and that is that if you want to tell where the relative strength is, you look and see if it's a takeaway or a inside bar. This one's barely inside bar, so I wouldn't get too excited about it. But if you go over to the sectors, you're going to find some of the sectors were definitely inside bars comparatively. For example, if I go to, for example, energy was weak today. Energy was an inside bar, I believe. Let's see if that bottom actually got under. Yeah, actually the energy did an under over, which is actually a bit more bullish than otherwise. But I know there were some inside bars. Probably financials were inside. That should have been relatively weak compared to the rest. And yeah, that's an inside. Actually, that one got under too. So we had some of them get under back over, but they didn't get back to the tops. And that was what I was looking for. And so relative strength-wise, some of these sectors are a little bit stronger than the others. The real question is, what are you going to do as you push back up? So let's pop back over to the indexes. And then we'll end the show on that because there's not much else to say tonight. You're going to need another day to really interpret what's going on, another day or two at most. And when I look at this, it was obvious there was two places. Once you broke under the range, right? The question is, would you stay under it? And no, you didn't. You pop right back into it. Now, just like on a bullish retest regen or even a bearish one, if you get up underneath that zone, even though you might not stay there, and a lot of times, just like trend, you'll come back and you'll do a retrace. That's essentially what this is doing, is retracing back up. It eventually will roll back over and come back down again. And so my take here is that, you got underneath the range, and yeah, you pop back in the range, but now you're going to have some markers on the way back up that you have to get back over. And so as you come back up to these markers, all of them have significance. The bottom of the swing point low, the bottom of this, reversal bar where some volume was left, all of those are going to have significance as you come back up. And then, of course, the top of that swing point low, which is the bearish retest regenerate. It's already regenerated once, right? You came up, you regenerate to the downside. Now you're coming back up. If you get back into the bottom of it and you flip around and come back down, you're probably going to set some new lows. And so that's what you're looking for, is as this comes back up, can it get over these significant areas, right? Because the sellers are going to be lurking now just like the buyers were all along, and they're going to be looking for places to take their shots, either putting insurance on, which causes selling in general, or actually outright shorting. And so that's what you want to look for as this thing pops back. So I think the jury's still out here. I wouldn't get too excited about today. You had a lower volume bounce. Doesn't mean it can't carry, but to me, it doesn't mean a lot either the other way. We need another bar to some more tests to tell us what's really going on. That's it for tonight. Have yourself a great one. And if you haven't looked, there are some videos out here. You might check in and see what's happening on some of these videos. Primarily doing a number of videos at this particular point in time for non-members with these 2-minute or less trades. Take care. Good night.